Good morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, April 24th. All right, fireworks over the weekend with the French elections. Dow opened up nearly 200 points. Market is rip-roaring to the upside. And one of the reasons we mentioned is that we need a catalyst to see are we done with the fourth wave pullback, and we're looking for our fifth and final completion to begin the fifth and final completion. And well, this looks like it could be it. Russell was pointing some clues that we were breaking above the downtrend channel, the upper end of the downtrend channel, and that looked pretty good. Although Friday we had a wish-washy day, so it really could have gone anywhere. But patience is a virtue in this market, and we absolutely talked about this many, many, many times. Let's just sit back. Let's follow what the price is doing. Price is key, and then we go from there. Now, one day doesn't make a trend. Obviously, a trend change for that matter. So we want to see what happens today. Does it give back all of its gains? Does it give back a good part of the gains? Or do we hold in with the gains and then we follow through tomorrow on Tuesday? That is going to be key and pivotal. It's going to be very, very important. So let's get right to the charts. And I also want to make a quick admin note. Remember, guys, for those of you who are getting the daily strategy videos, if you are looking for other stocks, other indexes, and you want me to cover, just throw it in the TMT support email, and we would gladly cover them for you. Very, very important, because we want to make sure that you guys are, if you're trading different asset classes and you're interested in one and we're not covering it on a daily basis, we have no problem doing so. All right, let's get right to it. UUP daily, you can see here, really not doing anything other than a gap down. I think we fill the gap a little bit, and then anything can go from here. However, excuse me, we have not alleviated bearish symmetry of lower lows and lower highs, so we're still really pretty much in this downtrend, and it also pretty much identifies a nice pattern of a descending triangle now. So this is something that I want you to pay attention to. You can see that clearly here. Here's the mouth. Let's just bring that right over. Let me get that. That's the 2660 area right there. Let me move that right about there. Move this up. Okay, and that's that area that we're going to hold. You can see here, though, this is definitely a descending triangle. So let's see what happens. And remember, we want to follow these. For those of you who are following commodities, very important. You can see it clearly here. We could even bounce around even a little bit more, get closer into the apex of the triangle, and then break down. So still needs a little bit of work. Let's continue to watch this and monitor for, of course, our commodity sector. All right, ES. Excuse me. We have this downtrend channel, and we can see we're making series of lower lows and lower highs. Now remember, if we can sustain these gains here, my guess would be anywhere, would probably be right to the top of this channel, maybe to the top of this area here, to challenge the all-time highs of 2400. And if that happens, we are going to be on our fifth leg capitulatory top. And when it stops is when we really want to digest that and see where it happens. Look at the RSI finally moving break above our downtrend line. You can see MACD hasn't quite given a buy signal yet, but RSI did. That's also a very good sign. And really what it comes down to, and remember we mentioned this, right? Really no conviction to the downside. I mean, we didn't see any really deep pullbacks and then deeper pullbacks. We really didn't see that. So we also said, this could just be a fourth wave minor, and it really looks that way. And remember, guys, I'm not saying that it was at the moment. We need another day or so, and then I'll definitely call that a fourth wave minor, looking for that fifth wave extension, for that final completion of this full bull market run. And maybe the French election is going to happen. We'll have our final results. I believe it's May 8th. I believe it's the 8th or the 4th. Don't hold me to that at the moment, but I do believe it's the 8th. Okay, so looking pretty good here, and if we do break up and hold above here, that's going to give us our clue that any pullbacks are going to be bought, because everybody's going to pile in. And that's exactly what I was talking about last week and the prior week, that the money managers are long in the tooth, and they want to have this market as high as possible so they could sell into any big extended rallies, okay, and get all the retail public long up here at these lofty levels, okay. All right, sorry about that. Next is going to be NQ. Really the same thing. NQ is doing pretty well. Really holding in. Big cap tech is extremely expensive. Wouldn't look to buy anything on a buy and hold type strategy. I would look to at least, if at all anything, look to buy pullbacks, and of course, same strategy applies to all of the indexes as well. Okay, so let's see. We'll probably break up around here today. Let's see, 54. Yeah, we probably would take out. We would make all-time highs as of right now in NQ again, and that will be bought pretty much if anything. And now we have the quote-unquote Donald Trump amazing tax plan that's going to be announced. That could add fuel to the fire for a bigger, another bigger move to come. Okay. Crude oil, you can see that crude oil here really not doing anything. Remember, all of these charts, unfortunately, are going to change a little bit because of the fact what happened over the weekend. News does trump the charts, but I want you to still be aware of these resistance areas in all of the indices and, of course, the commodities that I show you, okay? Here's the 49.75, 52.97, and again, 53, 53.82. Those are your levels for today's trade, okay? Gold, it really kind of plays into what we're talking about. Remember, I wasn't so convinced gold is going to go higher, right? Because of GDX. And I said if we get a risk-on appetite, we could literally really see gold fall one more time. And gold is in the seasonal time of weakness. Here's that nice little bearish rising wedge into resistance. I'd like to show that to you as I'm doing it. So we have a beautiful little bearish rising wedge. And we have gold right now and bonds down pretty big. That's just going to trigger that break below the 20 and, of course, this lower trend line. So we're going to see where it stops this next target. We got a gap fill area here. My guess is going to fill the gap. That's just my guess. And then we'll see. Gold comes into seasonal weakness up until the end of June, July. And then we'll reevaluate it. That's where I think gold should be bought because that's when I think market will probably top sometime between July and October. But again, right now it's just a thought. We have no idea when the markets top, but between where we're looking at and what the patterns are, and from the prior market crashes of 1987, 2000, 2009, patterns are very, very similar, so just keep that in mind. GDX, see, this was the really telltale sign that gold is not rallying. GDX, the miners usually go first before gold does, and you can see that clearly here. Okay, but these are your levels for today's trade. Bonds, same thing. Bonds are getting clobbered right now. We're looking at right around 52. Actually, 52.26 was where last time we had a quote, and that comes right back into the upper end of the range, which we also said if that does happen and we can get a pullback to this range or to the TMT proprietary price channels, kind of chop around a little bit, hold, take out this little swing high here. Targets anywhere in here for the gap fill would be an ideal play. But again, it's going to need a little bit of work and, of course, a lot more patience. Okay, but these are your levels for today's trade. Next is going to be TLT. Just want to show you can see we've been consolidating underneath the 200. It's going to need to take out the 200. Bottom line 124.80, 125 to be exact, and also on a closing basis. We need a couple of candle close, and if that does happen, we can take a beeline run up to the gap area of resistance. Okay. Next is going to be your spiders. The indexes, you can see that we've been holding this symmetrical triangle. So we should be breaking right out of this thing, probably taking out all of these areas here. And then we're going to see where it closes and where it opens for tomorrow's trade, okay? So these are all going to be taken out pretty much today. But let's just see where it goes, and let's see what happens. Maybe we get a back test of this symmetrical triangle, and then we start moving higher again, and we get everybody long. This is actually falling into plan. This was one of our analogies, and if this does happen, and then we get the Donald Trump tax plan, everybody loves that, and everybody just keeps buying this market with a 26 forward PE, which is insane to even buy. Let them do that, because that's what's going to happen. It's going to fuel this market to get to ridiculous levels where the smart money, where us, at one point in time, we're going to be looking to short. But in the meantime, we follow the trend. The trend is your friend. Transports really weren't doing too much, but again, this will trump the charts. We'll see what happens. These are your levels. These are your resistance levels. Will probably get taken out for today. IWM. To me, this was the telltale sign, right? The IWM, I said, watch this here. We did break out of this downtrend channel back from early February. This is going to get taken out here at this time, and then we'll see. We'll see where this goes if the Russell starts to really muster up some steam to get to the upside, as well as the transports, that's going to be the bullish case. We did get a MACD buy signal here, and we did get a buy signal in RSI. So that's why I said look for signs here. VIX, the VXX 17 and a quarter really didn't do much. I mean, to have the markets pull back all of this and the VIX still at 17, there wasn't enough hedging going on. There wasn't enough fear going on. So we need more longs, more shorts to keep trying to short the market. That'll add more fuel to the fire. Last is going to be the Qs. And again, remember, we'll probably break back above this, the all-time highs. That'll also help the IWM and the transports really muster up some steam to get going with this to the long side. So let's see what happens, guys. And again, let's see where it closes today, and let's see where it closes tomorrow for Tuesday's trade. Have a great day, everybody. We'll see you tomorrow. Take care.